Good morning, guys. Welcome in. Welcome. Sue Whipple, welcome in. Dorsey, how you guys doing? Welcome in, everybody. Bianca, welcome in, everybody. Good morning. How did you guys all do yesterday? Amazon faked you out 10 minutes before close. David, I imagine you probably took that 229 break. It's still valid today. You can't. I would say this. You have to understand that trading into close, like this is a long, right here, this is absolutely a long on the market, but these type of longs right into end of day is very dangerous. If it happened here, right, this would be totally valid and probably would have worked. It's just a matter of timing, right? Into close tends to be a lot of reversals, right? So just keep that in mind when you're trading your power hour, right? The last 15 minutes, you can get some pretty nasty reversals. So don't stress it, but it still is valid today, actually. Arias, yes, that is true. Absolutely. Yeah. David Hernandez, yep. Burmy, welcome in, Burmy. How you doing? Okay. So, first of all, I want to just let everyone know, welcome in. And I probably have said that 12 times this morning. But I have a little announcement to make. You guys probably already know what the announcement's going to be. I'll announce it in about maybe 2 minutes' time. Okay. We're going to dive into our Econ data earnings reports. We'll go over technicals, right? We have some things happening this morning, some things moving. Yesterday was a little bit of a lackluster session. I mean, I made money yesterday. Actually had a pretty good day yesterday. I just shorted the highs, right? I got some shorts at the highs, got downside move, shorts at the highs, downside move, and had a nice day. Mena, wow, Mena, thank you very much for supporting. Mena, you are absolutely awesome. Thank you for supporting. That is very kind of you. Thank you for the $20. Okay. I want to see if I can do this for us. I'm going to open a new window over here. Hold on a second. I'm hiding this right now for a second. I'm hiding this right now. I'm doing something sneaky. So give me a quick minute here. While we're still waiting for people to join in, we only have 600 people here this morning. Where is everybody? Everyone's sleeping in? What's going on here? What's going on here? What is going on here? Where is everybody? Okay. All right. So I'll show you guys in a minute. I'm gonna jump into it. I want to go over our charts first, technicals, and then we'll announce it close to around 8:40. That's what we'll do. 8:40. We'll announce it. Okay. So, guys, don't forget to like the video, guys. Like the video when you guys can. That's the only thing I ask for. Let's jump right into it. Today's session obviously is December 23rd. Is Tuesday. We're getting closer and closer to Christmas. I'll be on tomorrow morning, so I'm still going to be on tomorrow morning. I will be here tomorrow morning for a pre-market live. We have data today. We have some big data today. About 7 minutes ago, we got GDP data. The GDP data was out. I don't have the number in front of me, but I know it was released, so be aware of that. Besides that, we have some data at 9:15, so in about 40 minutes or so. We have consumer confidence at 10 o'clock as well. And we have new home sales at 10 o'clock as well. Okay, so some big things happening today at 10 o'clock. Be aware of that going into our session ahead of us. We have 10 o'clock data today, okay? Wednesday, tomorrow, we have jobless claims in the morning. Jobless claims is going to be important. Obviously, it's not critical, right? Market probably won't be moving too much tomorrow, but we'll talk about tomorrow's session tomorrow, right? Today, we're talking about today. On the earnings docket, you guys know this. There's nothing to watch out for, so we're going to close this out. Bam, just like that, right? Because for 2 weeks straight, we have no earnings reports to discuss. Let's dive into our charts, guys, and then we'll jump back out of this. So let's go over our charts first. SPY. On the SPY chart, yesterday's session it's very dark here, by the way. I don't know why it's so dark, and it's very gloomy right now. So just the lighting is not great, but it doesn't matter, right? It's not, you guys are not here to see me. You guys are here to see the charts. So on the SPY chart, yesterday's session was basically a channel for a while, right? It was a grind up channel, and we had supply rejections come in. We had the supply above us, 684 supply. And if you were with us on live on Friday or on Monday, all I did was just do this. I bought puts here, and then I bought puts here again, and that was it. And then once it tapped 3 times at this point, it was no longer valid, right? obviously broke out. The more times you tap a level of supply, the more likely it's going to break, and obviously it broke out, right? So little cash flow day yesterday for me, made some money, and I was happy with this. Each trade for me was like 30, almost 30%, and that was quite good, right? Yesterday's session. Now the real grain of the market, though, the grain of the market was bullish, and the reality is if you were trading SPY looking for demand bounces yesterday, looking for us to pull back like this, looking for demand bounces, you didn't get it, right? You didn't get your demand bounces, and that's why I couldn't go long yesterday. I wanted to see us pull back to this demand zone for a long, and we didn't do that. And so I was stuck doing the most difficult type of trades, which is shorting the highs in a grind up market, right? Shorting the highs in a grind up market is the formula to lose money as a new trader. If you are a good executor and you've been trading for a long time, you can do it, right? And yesterday was an example of that. But I can promise you this, there probably were some people who got burned yesterday trying to short the grind up, because you have to be an absolute surgeon, right? You have to be an absolute surgeon to short grinds up like this, because again, the grain of the market was bullish and you were shorting in an uptrend. You can do it, but the quality of the trade is not A tier. But that's fine, right? It's like you don't go to the grocery store and buy, the A5 Wagyu every morning, right? Every day, right? You can't buy the A5 Wagyu every day. Sometimes you got to get the skirt steak. Sometimes you got to get the meat that's not the best. And that was yesterday's session, right? You were provided a B tier price action, and you adjusted for that, right? Now, if you didn't adjust for that, then obviously it happens, right? You move on. But the grind of the market was resulted in sort of B tier setups, and that's just my opinion. Now, today's session, where are we now? Well, right now we're still in the same grind up, right? And we had some reaction to our data here this morning, but the question becomes this: is in this grind up here, you want to see us pull back to demand, right? You are in a market that is extending higher. And even yesterday's session, we spoke about in detail. We said, hey, look for this, right? Look for the little bit of a flash sell and look for the buy up at demand, right? And the buy up at demand is going to be either here or over here. Now, just because that didn't happen yesterday doesn't mean we were necessarily wrong about that. It just means it hasn't happened yet. So if you're looking for longs today, your long side trades are still valid at demand, and our demand is the same thing as it was yesterday, right? It's a 681 level, right? 681 level right here. It's the Friday high. It's the Thursday's highs almost. It's the Wednesday pre-market high. It's these areas over here, the lows over here, right? It's this whole band over here between 681.50 and 681, right? This whole band over here is where you want to see us pull back to for an upside move. That's a very clear pivot, a very clear inflection point going into our Tuesday morning. Now, like I said yesterday, I also said it's still valid if this happens, right? So again, the same scenario that was yesterday is still today. Nothing has really changed from yesterday into today, and we're still watching the same things here on the SPY chart. Now, if you lose this level, this is a very important thing here. If you lose this level here, the Santa rally is off, right? The Santa rally is closed. He's going back to the North Pole. That's it. We're done, right? And and this happens, right? We probably sell off into 675 at least, and possibly even beyond that, right? So again, under 679.50 is a bear side move, and we move back into 675. That's where the market's headed to if we lose this level. But as of right now, there should be no discussion of that because we are simply just bullish. If the market pulls back, you could look for a move higher. If the market grinds higher today, if we see us do the same thing we did today, where it just does this, right? You have to understand something. We are still in a bullish market here, right? And if you are shorting in a bull market, you are being a surgeon, right? You are being an absolute surgeon, and you're looking for a push into extension highs, and you're shorting the exact highs for downside moves, right? That's what you're doing. So if you are shorting, you're shorting at resistance areas, at resistance levels for downside, right? But you're being surgical about it, and you're not being a trader that holds the whole position looking for 1,000,000%, right? You're just getting in, you're trailing your positions, and you're squeezing as much as you can out of that trade, but understanding that you are against the EMAs, you're against the trend, and you're against the structure of the market, right? And it's okay to do that sometimes. That's what I did yesterday too. That's what I think Mike did. That's what Rav did, right? But the grain of the market is still bullish on the 1 hour timeframes, on the 15-minute timeframes. And if you are going against the trend, you are scaling in and scalping it fast. Okay, that's what it is today's session. Obviously, pull back to demand. Those are the more high quality. Those would be the A tier setups, that the A5 setups in the market. Okay, that's what I'm seeing today's session on this SPY chart. On the ES chart, it's the same thing as it was yesterday. Really, nothing has changed here. Now, I said this yesterday. I spoke about the 681 level yesterday, and I said, guys, 681 would line up about with that 68.93 level here on the ES chart. This whole band over here is your demand today. If you see us pull back to this level and you want to form a long side trade, it's right there. That's where it is today, right? This is your first long side trade today. If you pull back there and you see us developing a higher low, that's your trade today, right? A higher low formation today at the 681.5s, at the 6900 ES level. That would be your top watch, right? So again, these are the things to look out for today's session. This is your first lower high formation possibility. If we form it there, then look for longs. And the second case is going to be back at the 68.70s, which would be another opportunity for long side trades. And again, just like I said yesterday, it's either going to be here or it's going to be there, right? I don't know what's the right level yet. I don't know, right? And if anybody tells you what the right level is, they're wrong and don't listen to them, right? We don't know. It's going to be one of them. We think it's going to be one of them. And obviously, if we lose this one, right? If we lose this one, the last line of defense, then you know that it does not matter anymore. We're selling off back into this level over here. Why? Why am I just drawing little lines all over the place? Because this is the 6900 ES level, which is the Friday high. This is also the Tuesday high and the level from Monday and the lows of that Thursday session, the low of that Monday session. So it's a very important level, very important inflection point. And then this level over here is the high of Thursday, is the low of Friday, is the low of Monday before the after hour sell off. So you have two big levels pretty close to each other. And what we can't do, though, is we can't just go in here and say, you know what, this is a zone of demand. We can't just go and say, this is a zone of demand. We're going to long this whole thing. No, we can't do that, right? We know that for us, these are two individual levels that we're watching today. And if we see us develop a hold at these levels, that's where we go long. And that's just simply what it is, right? So it's not abundantly clear. We have just one simple level. It's obviously two things to watch out for, but it's not that far-fetched. It's not that crazy to watch two levels today for long side trades, okay? On the Qs chart, on the QQQ, it's the same thing, right? You can see that there are it's a very similar picture to SPY now, and this is giving us even more clarity. So first of all, what happened yesterday on the Qs was a failure of 620, right? You guys knew about 620 in the pre-market session, and you guys saw the signs of us failing 620 in downside move yesterday. But then again, we sort of developed a hold yesterday and kept pushing a supply, pushing a supply, and pushing a supply. So you can see that we didn't really, there wasn't really that much juice on the tech side yesterday compared to the SPY chart, right? SPY was stronger, Qs a lot weaker, right? And just look at the comparison here. Look at the SPY trend yesterday. Look at the QQQ trend yesterday, right? Completely different trend. So you do have tech lagging behind the S&P. Now, where is this going to now? In my opinion, the QQQ chart, even though it's weaker than the SPY chart, it's the same thing, right? We're watching two independent levels here on this chart, right? We're watching the 615 area for demand. If we pull back there, that's a long side trade for me. I'm also watching the 613 level, right? 613 is the megalodon level here. It's the Thursday high. It's the breakout level from Friday of last week. It's a very important inflection point. And this is our must hold, our must defend area on the market. If we pull back there, it's a long side trade. It's a long. I'm looking for longs there. If you fail below 613, then I am wrong about longs, right? And this is what happens. We do this today, right? So you know that our levels are guided by 615 and 613. And our bias, right? We're driving our bias from here. Our bias is also driven from the 613s. Now, again, I'm not saying you can't short in a bull market, right? Remember what we say, we always say this. I always show you guys how this works, right? You could be the trader that looks for the tops in a bull market, right? This is the top in a bull market, like looking for shorts here, and it's valid. But again, it's a bull market, right? And it probably will do that eventually. So if you are showing the tops, be aware of that. The best trades, in my opinion, the best trades typically are going to be the ones where you get a pullback, a retracement to your demand zone, and you develop along there, right? Why? Because you're going with the EMAs rather than going against those EMAs. And that's what tends to be the biggest percent returns. Okay, so this is what I'm watching, or this is what I'm watching today's session, 615 or 613 on the chart ahead of us. Okay, what I'm going to do now is I'm going to do my little announcement here. You guys already know what the announcement is. The announcement is obviously giveaway tomorrow. I'm going to show you something that not many people would ever show you. But I will show it to you because you guys have supported me as much as I've supported you guys. And if I can bring my mouse over here, I'm going to do this. How do I do this? Hold on a second. Okay, yeah, there, bam. So this is my YouTube dashboard. I'm probably going to lose all of my everything if I show you guys this, all my engagement on YouTube right now, but it doesn't really matter. I put this from October 24th to December 22nd. I've made $918 in the last 2 months. That's how much I've made on YouTube. So I will be giving away, I'm keeping $18 myself, suckers. This is my money. $18 is mine. So that's my payment to myself, but I'm gonna give you guys $900. Okay. So nine people, not 10. I'm not giving 10 because I thought about it. Well, I'm not giving away my money, right? I'm giving away YouTube's money. So I'm not doing 10. I'm not doing 1,000. I'm doing 900, right? So you got to deal with it. But I'm giving away $900 tomorrow morning to 9 of you guys, not 10, right? Because again, I'm not giving away my money. I'm giving away YouTube's money. So this is what's happening. Be there or be square. Even if you don't plan on trade tomorrow, just show up. Just show up. We'll go over levels. We'll go over some long-term ideas. We'll keep it quick and simple. I'll hop on for 20 minutes, guys. I'll be on for 20 minutes. All you got to do is you got to comment in it, post something in it, and then I download all your names in the transcription. Right, I'll go to the transcription. And you download all the names, and I do an equal random on it's a formula on Excel. Equal random, bam, 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 bam. It goes through all your names, and then it pulls 9 of you guys out. Right, I do it each time. I do it 9 times, and so all you got to do is you got to be here tomorrow morning at 8:30 a.m. Eastern Standard Time. Even if you don't plan to trade, be here because I want to see a lot of viewers. I know you guys aren't going to show up. I know a lot of you guys aren't going to show up because you guys are already rich. But you know what? Show up and support, okay? 9 people, $100. Right. I should have refreshed that. I should have probably refreshed that, but you guys believe me, right? I'm not like inspect elementing that, right? You guys know that that's real, okay? I don't know, okay? So on the charts, let's dive into our charts, guys. Let's dive back into it. Let's spend the rest of our time here, okay? Nvidia. So Nvidia yesterday, what did Nvidia do yesterday? It did nothing, right? It did nothing. And this is the theme yesterday's session was a lot of nothing happened, right? There's a lot of nothingness. And today's session, we likely do pull back to this level here, right? I can say this pretty confidently that if I were a betting man, I would bet that we pull back to this level right here today, right? This is the level we probably pull back to. Why would I say that? Because we have a gap here, right? There's a gap right below over here, right? So this is obviously there's a gap here, and it's very likely we fill this gap. That's just based upon stats, we tend to fill these gaps off of high percentage, okay? So under this level here, which we are seeing right now, we should see the gap fill back into this level here in NVIDIA. Now the question here is, where's your trade, right? Well, the trade for me is gonna be here, right? If I see us pull back to this level today, 181 to 180, and I see us develop a strong hold here, this is a long side play for me, right? This would be just the same thing as SPY, watching the demands below, or the Qs, watching those demands below. I would watch this. Now, I'm not set in stone on this right now, though. I'm not set in stone on this. But this is my first bounce area in NVIDIA, and my second bounce area in NVIDIA is right over here at 178. And this is a common theme we're seeing across the board this morning, is 2 independent bounce levels, right? And the reality is you just don't know which one's gonna be the right level. This is the first area I'm watching here is 181 to 180, right? This whole band over here is the first level, and the second band is gonna be over here at the 178, right? 178 is going to be a very important level as well, right? So if you see us pull back today, lower high formation here or lower high formation here. Again, I know I'm showing you guys things where it's like, why is this guy showing us 2 different levels? But again, I have to, because you can see this is a clear level. It's the Friday high, and this is a clear level, right? It's the Wednesday high. It's the break at level from Friday, right? It's a very important level here. I would argue, to be honest with you, 178 is probably the most important level in this chart. 178 is the megalodon level here on NVIDIA. If we pull back to 178 today, that's my top watch for longs. My secondary watch, 181 to 180, okay? Moving on, AMD. AMD is a weak chart, right? This is a weak chart now. I mean, it's failed under 215. It's failed under the Friday highs, and it's broken down under 215. And under 215, you know where we're headed to. You know where this chart should, in theory, go to. back to 210, right? 212 would be a little bit of a level here, but it's not my big level. We're headed back to 210 now. That's where I think we're going to this chart. And the question is, do we hold 210? This is a big demand zone below. Be cautious of shorting back into demand. 210 is a big inflection point here on AMD. Under 210, it gets very weak again, right? Under 210, the chart gets very weak and it moves back into the lows of that Friday session, right? Why do I say that? Because if you lose 210, we should see an equal, I mean, look at this, equal move down, right? Big move down, equal move up, right? If we fail below 210, we'll see an equal move down. Stocks like to move in the same magnitude as it moved before, right? Because that's how volume works, right? So you see big downside move, big upside move. If you fail below 210, big downside move. So we need to see 210 maintain. If you are a bull in AMD, 210 has to hold here on the chart in front of us, okay? Let's move on, guys. Let's go over the SMH. We haven't gone over the SMH in a while, and I think it's important we discuss this because sometimes we miss these larger time frame ideas looking at just the actual stock. And transparently, we're not missing anything, right? You can see we're not missing anything. We're just in a midpoint between a big supply and a big demand here in the SMH. We have nothing to say here, right? Anytime you are at a midpoint between a big supply and a big demand, you just say nothing, right? There's just nothing to discuss here. You have a big supply above us. You know you can't long in a supply. You know you can't short back into demand here. Nothing to really talk about here on this SMH chart. The Appler, right? Apple. So Apple yesterday, I spoke about this in detail. I said, guys, I mean, this is the thing is I actually let Rav trade this. I didn't want to mess with this one, so I just traded SPY yesterday. But this was the idea, and this was the reason why Rav was shorting that Apple chart, right? The failure under 273. This was your level, right? Once we got below 273, we turned it into rejections, a break, a retest, a downside move, right? And your short could have been anywhere, right? But the best possible short for me, where I would be shorting, is this green candle right there, right? Right there is your short yesterday's session. And as soon as we broke 273, that's where the chart flipped back bearish, and we saw a downside almost all day, right? So again, really nice trade yesterday, really nice chart. Apple under 273 was your beauty level, okay? And so now where are we going to? Well, we're right back into 270, right? We've moved under 273. We're back into 270. And this is a reflection of the market today. Look how chopped up this chart looks right now. If I were to tell you what I think Apple is going to do this morning, it would be a lie and it would be a disservice to all the 1,000 people that are listening here right now. Apple right now does not have a clear trend. Under 270, that's where clear trend begins, or above 273, that's where clear trend begins. So if you were watching for Apple anywhere, you're watching for either this or you're watching for either this, right? But in no environment am I going to be trading Apple in between this range over here, right? Over here is my dead zone. This is the DZ, and I would not get involved in the DZ today, right? The dead zone between 273 and 270 flat. If we can break above 273, we have upside in 276. If you fail below 270, downside into 267, right? So you have some potential here, but the potential is outside of the bounds between your channel high and your channel low. It's not inside these goalposts, right? You want to see us above this level or below this level for upside or downside moves, okay? That's what it is today here on the Apple chart. Moving on, guys, let's go over some other names. Let's go over IWM. We missed that this morning. IWM. I'm gonna bring this into rotation, guys. I'll bring it into rotation after our other ETFs. So, so on this chart, we have let me close Discord out. So on this chart, we have what's it called? We have our IWM, right, failing back below the head and shoulders level, right? So yesterday's session, we said, guys, this is a clear head and shoulders. If it breaks the head and shoulders, look for upside. Now look how clear this chart was, right? Almost right off the open, it broke, it retested the 253 level and resulted in an upside all day, right? So this is the thing that I talk about, right? Sometimes you have a level and your level is your everything, right? Your level is your everything. If we're above it, bullish. If we're below it, bearish, right? And you can see that the break above it, right? Those little bit of reactions above it in the 5-minute time frame are what tell you, hey, take the trade. And you can see it's right there. Hey, take the trade, right? It's above it. It's breaking above it. 955 candle, the first candle closure above it. It maintained above it. And that's what resulted in upside between 255, right? And I traded SPY yesterday. Look, I traded SPY. I traded SPY shorting little resistance levels yesterday. I traded SPY shorting SPY here and here, right? It made some money, right? But look at the IWM. Imagine you just came in the IWM and said, you know what? Screw it. I'm going to long IWM yesterday as long as we were above 253. And if you did that yesterday's session, right over here, you longed it right there, you would have gotten actually, it's not that crazy. I thought this was crazier. It's not that crazy. Okay, so it's not that crazy. You would have gotten like a 1% move here on the IWM, about $2 in upside here. So nothing crazy. I thought this was crazier for whatever reason. It looked crazier. It looked crazier, but it's really not that crazy. Okay, and now what's happening here? It was a bullish move yesterday, but where is the IWM going now? Well, the IWM is now failing back below 253, right? So you know what's going to happen here at IWM is right now we are, if you were bullish yesterday, what are you now? You're bear, right? Because you're under 253. Your bias is driven from that one level. If we're above that level, we're bullish. If we're below that level, we're bearish. And as of right now, we are below that 253 level, and therefore you know what we're going to. We're going back into these lows right now, right? That's what we're going to. So in theory, if we do continue closing, if we do continue this 5-minute selling here under this level, I think we see this happen. And I would argue this today. This could possibly be an even better trade than it was yesterday. Why? Because look at all these trapped up buyers over here. Imagine all those buyers yesterday, they were scratching their head like this saying, what the hell happened, right? I thought this was an invalidation of the head and shoulders, right? And then now they're seeing a big fat red candle like this. If this candle stayed, if the 5-minute open today, right? If the 5-minute open today on IWM, if it stays below this 253 level by 9:45, right? This will probably engage in selling today, right? So a very clear chart here on the IWM. As long as we're under this level here, we're bearish. If we reclaim this level, then I'm wrong, right? And we just rip higher. So again, you know that your bias is driven from one particular level, okay? If we just straight up rally above this level off the gate, then obviously don't short it, right? But if you see us begin to do this off the open, right? A little bit of a list of retest rejections coming in. This is your best possible short trade. I'm talking way too fast. This is your best possible short trade today for a downside move. I went sonic speed for a second. I was about to start just like speaking it in a different language for a second. Okay, let's slow down. Let's slow down. It's way too early to be talking that fast. All right, let's go over Tesla. Okay, on the Tesla chart, you can see here that we have a channel, and this is again resemblant of our Apple chart. If you're watching for anything today here on Tesla, we have 491 and we have 482. 482 is your demand below, and 491 is your supply above us. There is not much we can do here in between this channel, right? Just like Apple, right? Remember Apple chart? Remember how it was bound up between these levels here? Well, Tesla's doing the same thing, okay? You know that there is free flow, but the free flow is outside the bounds of your channel high and your channel low, either above the 491s for upside or below the 482s for downside. And if you guys recall, I said this in great detail yesterday as well. I said Tesla above 491 has upside potential into what level? 495. And I sat here for a second and I thought about it and I said, you know what? There is upside potential here back into 495. There is enough meat in the bones there to scalp this. And if you look at the chart yesterday, it actually did exactly what we said. It did exactly what we said. It broke above it. It went to the 495s, right? And a little bit of crack above here, but you barely saw much upside yesterday. It was a little bit of upside move, and then it lost the excitement and V-shaped back down. So if you longed Apple at supply, I don't feel bad for you. I think that you weren't here yesterday. If you longed Apple or if you longed Tesla at supply, I think that you didn't come to the session yesterday because once it broke this level, you knew at this moment it no longer was a long anymore, right? At this moment, it's already met the move. And so this was no longer a long side trade. Now, I would have expected it to hold here though, and it didn't hold here. It fell back below it and obviously sold off into close. Now, where is Tesla going today? Well, Tesla, again, 491, 482. Those are your big levels today here on Tesla, okay? Let's move on, guys. Let's go over Amazon. Amazon is still valid today, okay? 229 break. If this happens, it's still valid. This is a watch for me today session. If 229 can break, I'm looking for upside here in Amazon. Above this level, you guys know where it's going to, right? We spoke about this yesterday, so I'm not going to spend too much time on this today's session. Let's go over Meta. What am I missing? Bruce, there he is. He says Microsoft, Nvidia, Apple, Meta. Let's go Meta. So Meta is, I mean, look, I think this is a difficult chart to trade, and I'm going to let Rav trade this because I don't get involved here, right? I'll find my value in other places. Rav got a really good trade though on this one. I think. What do we think? QQQ. Mike took Q's short at the right over here, bam. And then Rav took the meta short. I think he took the meta short right at VWAP, right? So he took it right at VWAP, or even right above VWAP, actually. I think it was right above, it was above VWAP. It was like over here where he took the short at like 10 o'clock and saw some aggressive downside selling right into 660 demand. And I think he sold that into 660 level. And I think that was a smart move, right? And so the reason why he sold that is because it's demand, right? And demand is still demand until it breaks. And so today's session, as much as you want to short meta today, you know one thing, and you know one thing only. It's still demand here, right? 660, still big demand. Be careful of that. Okay, let's follow Bruce's guideline here. Netflix is at 93 support. This is still a big support. Nothing crazy here on Netflix. Let's go over last ticker, guys. Let's go over Microsoft and Intel. Last two tickers. Microsoft, you can see there is nothing happening here, right? Again, this is a reflection of the tech sector yesterday. Apple, you have your Tesla, you have Microsoft now doing the same thing, right? Microsoft has a very important level here at 490. If it can clear 490 flat, this goes higher, right? So your best and most probable long side trade is going to be above your 490, because if you clear 490, we should see highs, right? Or you should at least see. Okay, you should at least see 493, right? This level right there. So let's make that clear. You should at least see 493. So that's the first level to watch out for. So it's not really crazy here, because again, 493 is a very big rejection point. But above 490, you should see 493. Above 493, you should see 499, right, to 500. And that's your target here on Microsoft. INTC, guys, last ticker, INTC. There is not much to discuss here at Intel, right? Intel's not doing much. Intel is just trading back at the highs. Okay, guys, that's it for me today. Look, enjoy your sessions today, right? Enjoy your time with your family if you guys can. I will be active for the first hour today. Then I have to depart a little bit earlier today's session. So take that as you will. I think closer and closer we get to holidays, just understand that we have our own families and such. So just be mindful of that, right? Look, again, for yourselves, take it easy today, right? Don't go crazy. Don't get back all your gains. If you made money yesterday, go into today's session, just trading light size, right? Get some feelers out there and see what you can do. Again, I'll see you all tomorrow. Giveaway tomorrow morning. I'll see you guys all there live. Bye, guys.